Welcome to our webinar on the role of flood insurance and the role of it in the flood protection and climate adaptation. We still got people pouring in, so I'm just going to pause while we get everyone in the same room here. Very excited to have you all here today. This is obviously a pretty popular topic. I think we're breaking the record for Resilient Waters webinar participants today. I think without further ado, we should just get started here. So I'll just introduce myself quickly because we have a lot to get through and a lot of good conversations today. My name is Dan Streaker. I am the Resilient Waters Project Manager, all things related to flood infrastructure and flood resilience in the Lower Mainland and working on implementation of that. But as a kind of side hustle, we run these webinars to encourage shared learning. So welcome. We were hoping to have Solo Tribal Chief Tyrone McNeil with us today, who is a member of Seabird Island Band and also the chair of the Emergency Planning Secretariat, which is an Indigenous-led organization supporting 31 mainland Coast Salish First Nations with disaster planning and preparedness in the Lower Mainland here. But it looks like he is caught up in an emergency management that he really has to be part of this morning. So we will not have Chief McNeil with us this morning, unfortunately, but we still have our excellent other panelists. Charmaline, would you mind popping us ahead a couple slides? And just quickly of course, that was my cue before that to introduce my lovely co-moderator, Charmaline Mendes-Millard from the Partners for Action. So Charmaline, do you want to unmute and introduce?
Hi, everyone. Welcome. And we're really happy that you could join us today. I'm the Director of Partners for Action at University of Waterloo, and we're pleased to partner with Resilient Waters and World Wildlife Fund, Watershed Watch, and Ducks Unlimited and Nature Force on this session. So back to you, Dan. Thank you.
Thanks, Charmaline. And before we start, and because Tyrone's not here, it still feels prescient to in the context of flood resilience and flooding, to acknowledge how this relates to reconciliation. And so I'm sitting here on the unceded Musqueam, Tsleil-Waututh, and Squamish lands, and I welcome you all to introduce yourselves on the territories that you are, or lands of First Nations that you're sitting now, and also just to take a moment to reflect on flooding and First Nations from a settler perspective, at least, and to acknowledge that the systems that have been designed to control water and flooding aren't totally unlike those that are worked to control Indigenous people. And many First Nations were forcefully displaced and restricted to reserves, often in harm's way. In the floodplain, you can see here reserves in the Lower Mainland highlighted in yellow, and the floodplain. And it's estimated that roughly 90% of reserve lands across Canada are located in flood-prone areas, and this is certainly the case, as you can see, in the Lower Fraser watershed. And I guess I'd just also like to take a moment to acknowledge that I'm deeply honored to work with Chief McNeil on a collaborative initiative called the Lower Fraser Floodplains Coalition, and some of you also in this room, in this Zoom room, also working with me. And we're striving towards a more principled, equitable, and collaborative approach to flood resilience for the Lower Mainland. And in a way, our workshop today is a part of that process. Okay, Charmaline, you want to bop us to the next, please? Yes, and like Charmaline said, this has been a really collaborative effort among many of us to help organize. You'll have seen, many of you will have seen these different great folks, Charmaline, as well as Lena from Watershed Watch Salmon Society, Eric Falk from Ducks Unlimited Canada, and James Casey, WWF-Canada. So it's been great to put this whole thing together. Next. And just to quickly acknowledge, this is part of a series that we've been hosting that are topics all on different aspects of flood resilience. Many of you might have been part of these different ones. Last year, we did the challenges and solutions for flood infrastructure through the lens of floodgates, and then we did a non-prioritizing in-stream barriers. Today, we're doing flood insurance. Excited to announce our next topic sometime in early June. Date to be determined will be on bank stabilization techniques. So you can see it's quite an eclectic mix. Flood insurance is definitely like not in as much in my wheelhouse as some of these other things, but it's certainly of interest. So yeah, you can go and take a look at those webinars from the past at that link. And oh yeah, handing it over to Charmaline for some fun interactive stuff before we dive into the panelist presentations. Oh, and quickly,
Thanks.
just a thing, Charmaline, on kind of like the flow. So we're having all of our panelists give about 10 minutes presentation each, and then we'll have some time for some Q&A or in panelists to respond to each other, and then some Q&A. And Charmaline's going to walk us through kind of how that's going to work.
Thanks so much, Dan. So as Dan mentioned, we're going to start with 3 panelists today, and then have a break, and then 3 more. So you'll have something from the national to the provincial to the local perspectives, and also an overview of Insurance 101 for those of you who want to get an overview of how the ecosystem works. Before we dive in, though, we'd love to learn more about you. So if you could please scan this QR code or go to menti.com and enter the code 41084645. I'll share my screen in a minute and we will go through the questions together to see who's in the room. Okay. All right, bear with me, thank you. Okay, so here we go. We're in the Menti app, and hopefully you've been able to access it. If you have trouble for whatever reason, please feel free to put your answers in the chat, and Felicia will put them into the Menti for you. So first of all, a bit about you and who's in the room. Where are you currently located? Where are you zooming in from? See, we have over 100 people here, so this word cloud's going to get pretty fun and colorful. Fantastic. So we're seeing a lot of people from BC, Drumheller. I think I saw Melbourne Bay. Wonderful. Squamish, Guelph, Halifax, Ladner, Ottawa, McMahon, Territory, Invermere. Fantastic. It's great to see a mix of people from all over the world. All right, next question. What is your professional affiliation? What do you most identify with professionally? No surprise, insurance is leading in the pack, but we've got local government edging up there. Oh, and surpassing insurance and financial. A mix of not-for-profits, First Nations governments, federal government, academia, consultants. And for the none of the above, I apologize for not knowing how to categorize you. You're welcome to introduce yourself in the chat. That's your affiliation. Next up, who do you primarily serve in your daily work? What constituency do you mainly focus on? Great. We're hoping to get a great representation from the Lower Mainland and from BC, and it's great to see, oh, even one international. Amazing. Fantastic. Okay, and on to the final question for you, and this is something I'll come back to later. I'll put this up during the break as well so that you can enter in more questions, but what are you hoping to learn today, and what questions do you have? So throughout today, you're welcome to put questions into this Menti itself, and if not, if you can't access that, please put them in the chat. But what we're going to do is at the end, we'll look at these slides and look at your questions and base the Q&A from this. So I'll give you a few moments. Amazing. What's the impact of public flood protection infrastructure on homeowner insurance premiums? How to build an incentive compatible with sustainable and equitable flood resiliency, I'm assuming. How will local governments assist us if there's a huge catastrophic loss? How do insurance providers estimate flood risk? Good question. We are going to ask that at the end. What supports does the insurance industry offer to property owners for owners in flood-prone areas? How to use insurance as a tool to restrict? And then we don't know what the rest of that was, but we'll see that on the next screen once it's populated. So thank you so much, everyone, for filling that out. And we'll go back to the main presentation here. So since Tribal Chief Tyrone McNeil is not here, we're going to hand things over first to Jason Thistlethwaite, who is my faculty lead, Associate Director of Partners for Action at University of Waterloo, also an Associate Professor in the School of Environment, Enterprise and Development, and the co-lead of the Climate Risk Research Group, who's a leading expert in risk management policy and who has advised the National Task Force on Flood Insurance and Relocation, the National Adaptation Strategy, and Flood Risk Roundtable, and who regularly contributes to public dialogue on effective risk management in the media. You'll notice Jason's name in the news, on CBC and elsewhere, on anything to do with flood risk. So thank you, Jason, and turn it over to you.
Thanks for the introduction, Charmaline. I can't see my slides. Am I sharing my screen, or are they being facilitated?
I'm sharing them for you.
All right. Yes. So I can't see them at all. So I'm just.
Oh, you know what? I must have stopped. I forgot to share my screen again. I apologize. Just a minute. There you go.
Oh, wonderful. That looks familiar. Okay. Good morning, everyone. I'm grateful for the opportunity to speak today. I'd first like to thank everyone here for organizing today's event. And specifically, I'd like to thank everyone that was involved in delivering BC's flood strategy. It's an important accomplishment that no doubt many of you behind the scenes have put a lot of advocacy and hard work into. Today, I want to talk about how we maximize the public value of Canada's soon-to-be deployed flood insurance program. And here's why. As we move into some shifting public perceptions around the role of government, we're increasingly seeing concerns around budgets, costs, and so on. So as a taxpayer, I want to know that we get a fair deal in return for shouldering some of this liability associated with subsidizing coverage, for instance, in high-risk areas. So public value is what I want in return to this program, and I'm going to identify 3 recommendations I would like to see that achieves this objective. The first one, as you can see in the slide here, is a big problem in Canada, and that's our awareness gap. We have surveyed people in 2016 and 2020, And each time we found that only 6% of residents in Canada were aware they lived in a high risk zone. So the people who answered the red on the graph here were the ones that got this question right. This is not sustainable or effective for managing our exposures to flood risk or climate change risk in Canada. Okay, we can move on to the next slide there, Charmaline. There we go. This leads to my first recognition. If our government is going to get involved in flood insurance, let's use this as an opportunity to fix our broken flood map regime. And I'm not talking this is all maps I think we should be worried about here. We did a study a few years ago where we found that 62% of publicly available maps in Canada failed to meet very basic criteria. And I'm talking the most basic criteria. The map you see on your left here in this slide is one of the better examples on your study. In our study, this is a produced map from Newfoundland. The one you see on the right was produced for pennies on the dollar by comparison using some new mapping technology by our graduate students. So there's not really an excuse anymore to proceed without publicly available information on our hazards. If our graduate students can do this, so can governments. What we need to do is tie these maps to insurability, tie these maps to the program. I'm sure you're going to hear one of the novel suggestions today from Lucas that we need insurers and governments to do more to give consumers information on their risk, justifying their risk classification. We need all stakeholders communicating this information to consumers. For those enrolled in the flood insurance program, what we'd like to see is a transparent communication that comes with a clear message on the size of the subsidy that you're receiving to offset the costs of your coverage, and information on a sunset clause when that subsidy will be rolled back. This is important information to help communicate that there are rewards for reducing your risk and that over time that subsidy is going to in fact disappear. I know this could invite some concern about and consequences among local governments and stakeholders about poor planning, for instance, legacy developments in high-risk areas. But as we've said before, it's a breach of trust and unconscionable that governments sit on this data without an effort to inform the public. The next slide over, there we go. And we have research that suggests that these policies are wonderfully popular. So we're a big supporter of the federal government's initiative to develop a flood map portal, but a map portal isn't useful unless it is tied towards something that influences behavior. We know information from social science research does not change behavior. It needs to be linked to something. This is information. We actually stopped polling on this question years ago when we were asking about people's awareness. You can obviously see that there's a tremendous amount of demand and credibility for expanding our and fixing our map regime if we are going to, of course, move ahead with insurance. Okay, we can move on to our next gap. This is one that you might be, most insurance companies are, of course, aware of, and this is the protection gap. Awareness is our first step in facilitating behavioral change needed to reduce hazard risk. Awareness creates what is known as an intent to act, but even with that knowledge, efforts to prepare and mitigate will be insufficient. It isn't cheap, it's expensive. People don't like the expenses associated with, for instance, basement flood protection or community-wide mitigation. And so Canada faces what many countries face, and that is known as a protection gap. Now, insurers traditionally view this as the gap between those who have coverage and those who don't have coverage. I view the protection gap bigger, and that's the gap between those who have resources now for resilience and those resources that we'll need to protect our way of life in the future. We have some good news here, though, and that comes through some advancements in flood mapping. We know that our first gap here, the protection gap, the insurance protection gap in particular, is quite concentrated. So approximately 95,000 homes in Canada account for about 40% of the damage we experience annually. That gap right there needs to be addressed. You know, if we manage that, we're going to make our communities a lot more resilient. And the second gap we face associated with the protection gap is an equity gap. And so this is most pronounced for people who already lack the resources they need to recover from a hazard due to being disenfranchised from the policymaking process already. So we're doing work at the university and Partners for Action. We're doing what we call hotspot analysis, where we take risk maps, hazard risk maps, and align them with socioeconomic indicators to better understand just where these resource gaps are the highest. So how can we close these gaps? Moving on to our next slide. If we're going to absorb the liability through this public insurance program, particularly at a time when we have to contain budgets, it's most efficient to focus all of our resources on these gaps. We already have several policies in Canada that help fund mitigation, help fill these protection gaps, whether it's a disaster mitigation and adaptation fund, we have infrastructure funding, we have provinces giving out money, but more often than not, it isn't targeted, it isn't efficient, it isn't going to the communities that need it most. We know where these communities are. At a minimum, in these areas, we need governments to increase the shares of spending to a higher threshold than it currently sits at. So in Canada, we have this tradition of a third, a third, a third. Local governments, provinces, and federal governments do a third, a third, a third in terms of the funding. And this applies, for instance, to the Disaster Mitigation and Adaptation Fund, where the federal share is currently limited to 40%. That's paltry compared to what we see in a lot of other countries. In the US, for instance, we often see the federal share anywhere between 80 to 90%. You don't need to do that across the country, but it certainly would be useful to say to the communities who are at the highest risk, the federal government will take on more of a share in that way. Second, I'd like to see more innovation in the insurance industry to expand coverage to high-risk and disenfranchised communities, particularly those that are underinsured. I want abundant insurance. If we're going to start a Crown subsidiary, I think we should be experimenting in alternative coverage models, such as micro and parametric insurance that could be scaled to the community, or even building level to deal with traditionally underinsured groups, such as tenants, those who are marginalized, and Indigenous communities. Just because you don't own property doesn't mean there's a market for your insurance. Okay, moving on to our next gap. My last one. Last but not least, governments need to get out of their way and start governing. We can use a flood insurance as an opportunity to eliminate redundant and wasteful policy in the disaster risk reduction regime. Let me give you a brief example. This is a map of REFBC's flood mitigation plan in response to the devastating flooding in 2021. The black line is a new dike system that they need to build. They applied for and were approved for $34 million to rebuild this using provincial and federal recovery funding, DFA funding. The dike, though, is located on private property that is now uninhabitable, but still privately owned. So Merit proposed that these properties are acquired as a part of a managed retreats program to make space for the new dike and mitigation. This is a good example of co-benefits achieved from adaptation. Unfortunately, they can't do this because the property acquisition does not qualify for any additional federal provincial funding. So they have funding for the dike, they can't buy the land to actually build it. And we hear the story repeated among many. So this is one example of some of the governance and coordination we need to improve. Next slide over. So if we're going to put public dollars on the line, I want some policy coordination in return. Right now, we have 5 federal ministries involved in adaptation and disaster risk reduction, in addition to 10 provinces with multiple ministries, 3 territories, and countless municipalities. We need to align the myriad of policy we use to manage disaster risk around one goal, risk reduction. As a first step, this means reform of our disaster financial assistance arrangements, no more wasteful spending through DFA, no more rebuilding in higher risk areas. If we do these types of things, we in fact could be met with a surplus that can then be put back towards mitigation. Give that money to the poor people and to find people in Merit to acquire that land and build that dike, or help defend the 95,000 homes that contribute to 40% of our risk. One final recommendation I would like to see, and I think Craig is going to speak to this a little bit, but if we're putting all of this money into risk reduction, it had better show up in our insurance markets, particularly, of course, the government supported one, but also insurance markets more widely. We need to recognize investments in mitigation through lower premiums. And we can do this through something called community risk rating, where we reward high-performing communities with lower premiums. Okay, we'll go on to my last slide there. So thank you, everyone, for the opportunity to speak about my wish list of ideas. If we're going to be serious about this problem, governments need to demonstrate leadership, fixing its own house, supplying data to help us empower us with knowledge on how to manage our own risk, and generating governments that increases transparency and accountability is a good way to start and maximize the public benefits of our nation flood insurance program. Thank you very much for the time.
Thanks so much, Jason. I really appreciate it. If you have any questions for Jason, please put them in the chat or the Menti, and we'll keep things rocking and rolling. So next up, we've got Lucas Neufeld. He's a senior policy analyst on the regulatory initiatives team at the BC Financial Services Authority, BCFSA. His work is focused on building and actioning BCFSA BCFSA's approach to natural catastrophes and climate risks across the BC financial services sector. He also represents them on several national regulatory committees and working groups through the Canadian Council of Insurance Regulators and the Credit Union Prudential Supervisors Association. Thank you, Lucas, for being here. I'll hand it over to you.
Yeah, thank you, Charmaline. And I think my introduction was appropriately wordy, so I'm doing my role as a public servant. So I wanted to start with just an overview of who we are as an entity, BCFSA, as well as who we regulate, to get a sense of kind of the key players in the financial services sector and to start to make some of the connections in terms of their respective roles in building flood resilience. So we are an integrated regulator with oversight of some of the most important transactions a British Columbian could make throughout their lifetime. So from securing a mortgage, buying and insuring their home, to building their savings and trusting that their pensions will ultimately be there in retirement. I think one of the key pieces I really want to get out of this slide is just understanding the different connections between these different segments. So it's not just a bunch of people that BCFSA happens to regulate, but there's I'll pick up on this in a few slides, but there's a lot of connections between these different entities and a lot of commonalities, especially in BC, where we have a very prominent housing sector. Can you go to the next slide, please? So I didn't actually look carefully enough at Jason's slide, but this actually looks a lot like his recommendation number 3 in terms of pulling on that governance component and recognizing the need of a whole of society approach to building resilience. So kind of summarizing and putting that into my own words, but our role as a regulator is to conduct ongoing surveillance of the financial services sector, to identify material risks and potential consumer protection issues, and to intervene as necessary to ensure 2 things. 1, the safety and soundness of those that we regulate. So are they financially viable and sustainable? And 2, to protect consumers. This includes both providing guidance to financial service providers, so including to insurers, on our regulatory expectations. So how do we expect them to interact with customers, and how do we expect them to run their business in a sustainable way, as well as collaborating with industry to tackle emerging risks and issues, including flood risk. The important part here is that BCFSA and the insurance industry as itself need to be part of that broader whole of society approach to building resilience, which recognizes that there are other actors, including government and different private sector actors, that play a very important role in that broader idea of flood resilience. Next slide, please. So last year, BCFSA put out a discussion paper outlining our proposed approach to what we call natural catastrophes and climate-related risks, so flood being a component of that broader strategy. In that discussion paper, we emphasize the need for all financial service providers to identify, measure, manage, and disclose the natural catastrophic risks and the climate risks for both their business and their customers. But what does that actually mean for an integrated regulator, and especially in British Columbia? Well, first off, as a province, we're highly exposed to a number of different hazards, of which flood is one of the key ones, which really raises the profile of this issue as both a current and direct risk to the safety and soundness of individual financial institutions, but also to consumers. And aside from that exposure, commercial or residential real estate really plays an outsized role in our economy. As property values continue to increase and more homes and businesses are built in higher risk areas, more and more value is ultimately put in harm's way. And that's really before you actually start to consider some of the changes resulting from climate change. So in a future scenario, it's very possible that some of those low or medium risk areas could become higher risk areas. We need to think about what that looks like in kind of different climate scenarios into the future. So moving to the perspective of a regulator, BC's residents and homes and businesses are really at the center of a lot of our regulated segments. So there's the connection to the real estate and mortgage broker segments. I think that one's relatively straightforward. But if we think about credit unions, they're directly and presently exposed to flooding, primarily through lending and investment activities, which is even more concerning when you consider the makeup of a typical credit union, being regionally focused, is generally concentrated in residential lending and loans to small businesses. So the very homes and businesses that are increasingly exposed to flooding. So it's very important from our position as a prudential regulator to be keeping a pulse on whether credit unions understand not only whether their borrowers are in flood-prone areas, but also whether they have adequate insurance protection to protect them against the financial impacts of flooding, as that effectively transfers the risk away from the mortgage holder. Moving to insurers, and sorry, a lot on this side. Thanks, Charmaline. Insurers have that direct exposure, obviously, through the provision of insurance and may take steps to manage that risk. I don't think that's any secret that insurers are ultimately looking at what's on their books. And as a result, there may be some insurance affordability and availability challenges in high-risk areas, which is exactly what the federal program is looking to address. As insurers and reinsurers adapt their pricing, and Craig's going to get into a little bit of those feedback loops in his speaking remarks. But you start to get a sense of how central insurance becomes to flood resilience and the knock-on impact of that exposure on homeowners, including the impact on insurance premiums and availability, property values in a more direct sense, and potential restrictions on where lenders are willing to underwrite and lend. Ultimately, from a pure prudential perspective, I think it's pretty clear that we want our credit unions to manage their lending in high-risk areas, and we want our insurers to consider climate risk and how they're underwriting. But as a market conduct regulator, we're ultimately concerned with how this flows through to consumers. So it's really trying to balance those different sides of our mandate, the prudential side of our mandate and the market conduct or consumer protection component. I think this is one of the key reasons that this conversation of resilience becomes so central to what we're trying to achieve as a regulator, because we really need to work on getting risk out of the system rather than just pricing it and transferring it around between different financial service providers. Next slide, please. So at the national level, we've been collaborating with other provincial insurance regulators through two organizations, not that exciting, just acronyms, the CCIR, which is a group of regulators for insurance companies, and CISRO, which is the folks who regulate the intermediaries or insurance agents and brokers, to work with the insurance industry to address what we've identified as some primary consumer awareness gaps that we laid out in a position paper that we released last year. The basic takeaway from that paper was that homeowners may not understand how their properties are exposed to risk from natural catastrophes and how insurance products can play a role in protecting them and their assets against those risks. The kind of call to action is that the insurance industry needs to take more coordinated action to address the knowledge gaps and ensure consumers have information, advice, and incentives to make those risk-informed decisions respecting both potential adaptation investments they could make at the property level, as well as insurance coverage for that residual risk. Now, I've kind of alluded to this, but because you have the interplay of both insurers and intermediaries, or your insurance agents and your brokers, we've focused our call to action at the insurance industry as a collective, recognizing that shared responsibility and the need to have a coordinated and consistent approach. So there's 5 recommendations in our paper, and hopefully not stealing from Craig's thunder, because I think he's going to get into how some of this ties to the work that's being done through the federal flood insurance program. But these can really be thought of enablers that need to happen alongside that federal program. And it gets to some of the pieces Jason's talking about, is that awareness piece and that risk understanding being kind of a first step, and then moving from there to action to actually start to address risk. So the first recommendation in that paper is really to develop and action some best practices for communicating risk at point of sale and at renewal, so you have that updated understanding of your risk over time. The second is best practices for communicating insurance options to consumers. So do they actually understand the different things that are being offered and how they relate to their exposure? The third is taking steps to understand that taking steps to ensure consumers actually understand what they're being offered. So you understand how the deductible and the limits on your insurance policy are going to actually operate if something happens. The fourth, and it's really important, is the training and education for those that are actually distributing insurance products. Those that are interfacing with the customers are able to have those informed conversations. And the final one, and this is really where we talk about getting risk out of the system, it's ensuring that there's innovative products to encourage customers to act on that personalized information. just to tie it all together or summarize, our perspective as a regulator is really that insurers and the insurance industry as a whole can play a key role in building resilience by ensuring homeowners have that property-specific information and advice to make those informed decisions, which includes both those adaptation measures at the property level, as well as the purchase of insurance. But I think we're pushing and we're seeing insurers take a very active leadership role and also participating in some broader public resilience initiatives by sharing their risk and modeling expertise to promote that common understanding of risk at both the property level, but also at the regional level. So other financial sector participants and governments can have the same conversations with both property owners and with communities. So it really does come back to that idea of being part of that whole of society approach to flood resilience. That's it for me. So I think I'm now turning it over to Craig.
Hi, everyone, and thanks, Lucas. I'm going to try to build on both Jason and Lucas's presentation by providing a little bit of background on current trends in insurance, and I'm going to do a little bit of a dive into the National Flood Insurance Program. Next slide there, Charmaine. Yeah, we'll go to the next one. And then the next one. So I'm going to start with a discussion about insurance market failures and protection gaps, building on the presentation that Jason gave you. Next slide, please. So to do that, I'm just going to give a little bit of background on insurance, Insurance 101. Many of you will know this, but just for those that don't, the idea of insurance is that it distributes risk from unforeseen accidents. Events that are predictable are not good candidates for insurance, and that includes predictable flooding on floodplains. Insurers collect premiums, they underwrite the risk, and what this means is essentially if you have a home, you are paying the insurer to take that risk away from you. So you're facing risk, they price the risk, you pay a premium, and the premium is based on that transfer of risk. And then insurers in the background then invest that premium dollar to generate a return. And in the case of Canadian property and casualty insurers, so that would be your home, business, and car insurer, these are usually invested in fixed rate instruments, not equities, because people are getting in car accidents all the time, and so we're paying out claims all the time, unlike life insurers who have a much longer investment horizon. Next slide, please. To understand the current trends, it's important to also understand reinsurance. So just as you transfer your risk to an insurer, insurers then transfer their risk on to global reinsurers. So these are large companies domiciled usually in big capitals in Europe or in the US that essentially absorb global risk from a number of companies and governments. And then invest in the capital markets. They are they play a really significant role in Canada, for instance, for the Fort McMurray fire. The scale of the event was such that insurers couldn't basically hold that risk on their books; it would have bankrupted them. So they had actually bought reinsurance policies, and the reinsurers bore a significant portion of the cost for those events. Next slide, please. So to understand underwriting Canada, underwriting infers measurement. So there's 5 key property risks. The core ones are fire, wind, and hail. If you have a home insurance policy, you are insured against those 3 perils. Those are consistent for every insurance policy in the country. Then there are auxiliary risks, key ones being flood and earthquake, where you can buy additional endorsements for those risks. Those are even more location specific. What industry has a good idea where earthquakes are likely to happen, has a reasonably good idea of where floods are likely to happen, and so it prices those risks separately. Location is the primary consideration for any insurance policy. We derive location from flood maps and models, for instance, wildfire maps and models, earthquake models, and combined with claims histories. We take a look at where events have happened in the past and then use that to predict where they may happen in the future. This is becoming increasingly problematic in an era of climate change. The secondary consideration is construction. how a house is built often determines what will happen to it if a peril occurs. So we take I'm going to talk more about this later, but this is a key factor in pricing any insurance policy. Next slide, please. So emerging issues that we're facing in Canada. So starting in 2019, and due in large part to climate change events, growing climate change risk, reinsurers changed their pricing strategies globally around the world. So the price that insurers were paying, the premiums that insurers were paying to reinsurers, started going up dramatically. And what also happened was reinsurers used to just distribute the risk pretty equitably around the world. But what they began to do was to take a look at certain regions where events were becoming much more common and providing higher reinsurance, basically pricing higher reinsurance premiums in those places. So this would include places like California due to the wildfires, or Louisiana and Florida due to flooding. And yes, it's been affected in Canada, where places like British Columbia are facing higher reinsurance premiums for insurers that operate there due to a couple of factors. One is these increased events that have occurred, but also due to modeling changes where the risk for perils such as earthquake have shown to be much greater than what was previously understood. And so reinsurance premiums and costs for insurers went up in those places. As a result of those higher reinsurance premiums, insurers either raised property premiums or they absorbed some of those premiums, or they withdrew, they tried to restrict capacity in those markets. And that particularly happened in jurisdictions where there was pricing regulation. So in California, for instance, insurers were only able to charge a certain amount for home insurance premiums. And because of those caps, it became a losing proposition to operate in California when they themselves had to pay increasing amounts to reinsurers to operate there. Another area is that we're looking at is modeling is deficient. In an era where these changes are happening so quickly, a lot of our modeling is proving, well, not a lot of it, some of it is proving deficient, which elevates uncertainty for insurers. And wildfire is a key one. Our wildfire modeling in Canada isn't where it needs to be. The housing supply crisis is also creating urgency when coupled with what's happened with building codes. So our building code updates to the National Model Building Code, the climate resilience measures that we hoped to be in there in the 2025 cycle were punted to 2030. So homes that are built now aren't going to be as wind or hail or wildfire resistant as we would like them to be. And now we're facing a housing supply crisis where we're committed to building 3 million houses across the country in the next 5 or 6 or 7 years, I guess. And we have a big question about how are those homes going to be built and where are they going to be built? Next slide, please. So protection gaps, I'm going to build on what Jason talked about. So protection gaps emerge for several reasons. Insurers may decide not to cover certain perils such as landslides and tsunamis because they can't model the risk. So right now, those aren't covered by a home insurance policy in British Columbia. Insurers decide not to cover certain regions because the risk is no longer acceptable, or it's no longer accidental, and or reinsurance costs are too high, and or price regulations mean losses are certain. So they pull out of places or they restrict underwriting in places like California, and that leads to a protection gap. Insurers also, you can also end up with a protection gap if insurers adjust their products to keep premiums affordable. Higher deductibles, lower coverage limits. It means that consumers now have choice, but possibly inadequate protection. Next slide, please. And then there are market failures. Market failures can exist for a number of reasons. Consumers can misunderstand their insurance coverage and therefore are unprotected. That's obviously an issue we're trying to address head on based on what you've heard from Lucas. Consumers may misunderstand their own risk and therefore are unprotected. As Jason has noted, this is a big issue. Consumers may inadequately be aware of their risk and believe it's not worth the premium they would have to pay. This is what's happened in Quebec, and why only about 4% of Quebecois have earthquake insurance, even though their risk is almost as high as BC. And government disaster assistance may compete with insurance. So homeowners say, why would I buy insurance? Government's going to bail me out, and therefore they don't protect themselves. And this is an issue in Ontario. So market failures in this country, though, generally do not exist for wildfire, hail, and wind, including hurricanes and tornadoes, because they're core to property insurance. Next slide, please. So that brings us to flood. So taking a look at the protection gaps that exist in flood, and when I talk about flood, I'm talking about coastal storm surge. I'm talking about flooding from intense rainfall events that can happen almost anywhere. And then also talking about overland flooding in floodplains. When you focus on those, right now, those that are at high risk of flood, and Jason illustrated this, they simply can't get overland flood insurance today. Or if they can, it's very, very expensive. Over 1.5 million Canadian homeowners are in this situation. And how it's affected folks is, since 2016, the Canadian Red Cross did a study and found that Atlantic homeowners affected by flooding had to, on average, withdraw $63,000 from their RSPs to make ends meet because they couldn't access insurance coverage. Disaster financial assistance costs to governments are now unsustainable, and governments across the country, including the federal government, are now looking actively for a way out, for a way to modify disaster financial assistance and replace it with a more effective insurance program. And as a result of all this, and all of these pressures, about 7 years ago, a federal provincial territorial advisory council on flooding was established by then Minister Goodale, and it was succeeded by a task force on flood insurance and relocation in 2021. That task force issued its report in 2022. And in 2023, gladly, the federal budget committed to standing up a national flood insurance program within 3 years. Next slide, please. So what would this look like? So a national flood insurance program would offer a standardized flood product by all home insurance companies through existing broker and agent networks. Claims would be administered nationally by insurers on a not-for-profit basis. But in the background, they would cede those high-risk premiums to a federal reinsurance corporation operated by the Canadian Mortgage and Housing Corporation. We've just learned more details about this in the past week because the federal budget provided more details on this. And the federal government has committed to standing up Canada Re, that's what we think it's going to be called, may not be that name, within 12 months. So we're expecting the reinsurance corporation to be stood up. And then we expect, based upon discussions and agreements between the federal government and provincial governments, we expect then the insurance program and some sort of subsidy program for those of low and medium income that are particularly vulnerable. We expect that programming to be rolled out in the following year. What this means is that within the next couple of years, anyone in Canada should have access to flood insurance, no matter where they live. However, the program has to be carefully designed to incent or to disincent continued building floodplains and to incent risk reduction. Ideally, the program would be designed to be extended to other perils in the future where we're seeing protection gaps emerging, such as earthquake. Next slide, please. So in order, and this to get at several of your questions, I'm just going to speak a little bit about a risk rating framework, and Jason mentioned this as well. So in the US, when they developed a national flood insurance program, they established also an accompanying measurement framework called the community rating system. That's been now replaced with risk rating 2, which is also it's property-based. It measures both community risk and property-based risk in the US. And it's meant to provide an incentive-based system for homeowners and communities to protect themselves. And it ties that protection to insurance rates, which is something that several of you have said that you're interested in. So ideally in Canada, we're just getting underway with trying to design this. It would provide a standardized approach to communicating risk to homeowners at the purchase of the home, at the financing and refinancing of a home, and when insuring home, both at policy underwriting and renewal. And it would be core to answering that key question, that central question that Lucas posed and that we're in discussion with national regulators about, which is how do we do a much better job about insuring, from an insurance sector perspective, of ensuring homeowners are aware of the risk that they face. If properly designed, it could also be used as a broader measurement tool. It could, for instance, show, across a community or a neighborhood, which homes are at high risk. And it could be then used to inform emergency response resourcing, can inform investments in disaster mitigation, and could help set pricing for implementation of nature-based solutions. Ideally, it would consist of a label for new homes and a rating system for existing homes, which would be used by the financial sector and governments, not just insurers, to design incentives for risk reduction. And it should make the information which insurers already know available to the public. Wouldn't be something used to penalize, but to reward. I know in the back of folks' head, they're like, oh my gosh, what if my house scores really poorly on this? Is this going to affect my insurance premium? No. The reality is that insurers already have all this information. They're already factoring it into your insurance premium. What we're talking about is actually creating a system whereby that's much more transparent and available to homeowners so that they can take the right decisions to protect themselves. Next slide, please. So for a couple of minutes to talk about defining climate risk. Jason also touched on this. When we define climate risk, we're actually talking about three components of risk. One is hazard, which is the risk of a structure to a climate peril due to its location now and in a variable future. Not much you can do about a hazard. It exists. You live in a floodplain or you don't. Then there's the risk of the structure to a climate peril due to its physical characteristics. That's the exposure. That's an important component. The same house, that's in a floodplain, if it's built or if it's elevated in particular, above the freeboard of the flood, it may not be as exposed as another house that's in a floodplain, and has a significant amount of expensive equipment in its basement. Structure risk actually plays a much greater role in fluvial flooding, where you can actually do more for those spontaneous floods that can happen anywhere from rainfall. And then there's vulnerability, which is basically a socioeconomic determinant or health determinant that has to do with who's living in the structure. And that's a piece that I'm not going to get into as much, but it's also a very important piece of the puzzle. Next slide, please. So when we zoom into exposure, we're talking about two types of exposure: the property level exposure. How a home is built, often can determine its fate in a peril. This is a picture from Hawaii. This home actually was improvements were made to make it fire resilient in the 2 years before the fire occurred, and it was the last home standing in the area. So there are things that you can do to protect yourselves at the property level, even from intense events. And then there's the community level protections. It's the Winnipeg floodway, which investment of $60 million back in the 1960s has averted over $1 billion of losses since. Next slide, please. So when you're creating a residential risk rating, you're actually talking about several components. You're talking about the hazard, so the location-based component. Then you're talking about community exposure, which is, flood defenses, for instance, infrastructure investments, and property-based exposure. And what you want to do is to incent those latter two. Next slide. Next one, please. Labels can drive behavior. Important note, we've got a lot of experience with these, obviously, nutrition labels in our guide. Flooding would be a risk rating label. Ideally, wouldn't aggregate all the risks. That's very difficult to do. You wouldn't end up with a good or bad home, just as you don't have a good or bad can of soup. But what ideally you would do is have a rating for each of the perils: flood, wind, hail, so that you could determine, and it would have to be based on location as well as construction. It would basically inform you which perils you're approaching high risk for. Next slide, please. We know what to incent. Tons of work's been done by organizations like the Institute for Catastrophic Loss Reduction at the University of Western Ontario and the Intact Center at University of Waterloo. We've done a ton of work around what we need to do. We know what we need to do. We just need to incent folks to do it. Next slide, please. And so where are we at? All of this, and just wrapping up now. We've undertaken a survey of risk rating approaches across the US used for real estate risk disclosure. ICLR put out a report on that last year. We used that report to inform a workshop on developing our risk rating system in Canada, hosted by Natural Resources Canada in October. We also had a complimentary workshop with municipal stormwater directors to get their input in Toronto last October, and those were directors from cities across the country, including Vancouver. And then a Resilient Homes Task Force has just launched in February. The ICLR and the Canadian Home Builders Association are collaborating with the insurance industry to try to determine what a risk rating label might look like. Next slide, please. And the learnings to date, what we've learned so far in a risk rating system is, you need a static label for new home builds, a dynamic rating system for existing builds that's focused on incentives. Should be location intelligent. You don't necessarily need to encourage people to be protected from hail in downtown Vancouver, but you certainly do in Calgary. What we've learned from EnerGuide is that a relative approach, a Likert scale, more or less resilient, works better than absolute numbers. Cannot aggregate perils. I already spoke to that. And what you want to do at the end of the day is to be able to provide context in conversations that can be reinforced, through the real estate industry, banks, financial sector, governments, and that conversation would go something like this. Your home is at relatively high risk of hail due to its location, and your roof is not hail resistant, but you can protect your home and improve your rating if you install Class G shingles. So that's an example. Next slide, please. So in summary, costs of climate change are escalating more quickly than anticipated. Insurance and reinsurance is evolving given this reality, with government industry partnerships emerging around the world. The US, the UK, France, a number of other countries have partnerships around flood, as we're talking about here. And Canada finally is launching a national flood insurance program, which we expect to see operational within the next 2 years. Unfortunately, attendant to that program and important to the rollout of it, we lack the most basic tools to drive behavioral change, tools that do exist in the energy efficiency space that we can learn from. And these tools would, such as a risk rating system, would allow insurers and municipalities to measure community and household exposure and develop those incentives for reducing risk. I went very quick. I hope you were able to absorb all that, but anyway, I'll turn it back over to you.
Thank you so much, Craig. It's being recorded and it'll be shared along with the slides that the presenters are willing to share. So don't worry. I know it's a lot of information to absorb, and thank you so much to our 3 panelists so far. I'm just going to take one question or two before we take a break. So Craig, on that risk, those risk scores, somebody was asking, do the insurance companies then, or the Insurance Bureau of Canada, who actually sets those scores? Who creates that? You mentioned that you have a consultation process, and also if you could just maybe mention a little bit about the Insurance Bureau of Canada, because we missed your introduction.
Oh yes, of course. Thank you.
Yeah, no worries.
First, Insurance Bureau of Canada is the trade association for your car, home, and business insurers across the country. There's about 200 insurers, very competitive market. We're the trade association based in Toronto, but with regional offices across the country. And the risk rating system, actually, Natural Resources Canada has the mandate to develop it. It's in their minister's mandate letter to develop it, but it's been going very slowly, unfortunately. And so the home construction industry and the insurance industry have kind of taken matters into our own hands and pulled together this task force to help design it. And that's who we expect is going to design it. It'll be done hopefully at the Institute for Catastrophic Loss Reduction. They'll develop something, but then the intent is to then pilot it, test it, before it's sort of officially rolled out. It's going to take a couple of years to get it developed.
And we're going to start the second half of second portion of our webinar on the role of insurance in flood resiliency in the Lower Fraser in BC, with lessons for the rest of Canada as well. I'll just share my screen. Okie dokies. Can everyone see? Yep, great, thank you. All right, so I'm pleased to welcome John Russell, who is an experienced insurance claims professional with over 33 years of leadership in the industry. He's currently the Senior Vice President of Insurance Claims with Westland Insurance Group Limited, responsible for all claims related matters across the country. There's much more to John's bio, but I just wanted to mention that before the break, we focused on an overview of the insurance and financial landscape when it comes to flood resiliency, and heard from somebody from the province and a regulator and the Insurance Bureau of Canada that has a national focus. So now our next two presenters are going to be talking more about their perspective on what's going on in the Lower Mainland. So I'll hand it over to you, John, and thank you so much.
Great, thanks very much, Charmaline. Good morning and good afternoon to all of those that are east of the Rockies. Very pleased to be included in this panel and being asked to present today. Just a quick elevator chat on Westland. Westland Insurance Group is one of the largest and fastest growing independent insurance brokers in Canada. Our company roots were established in the Lower Mainland of BC in 1980. But over the last 44 years, we have expanded from coast to coast and have over 3,200 employees providing expertise and advisory-based services across a broad offering of insurance products and solutions. Today, I'll be presenting on how insurance can approach flood resiliency and adaptation. You'll probably hear some common themes similar to what Lucas presented, as well as Craig. Once again, this is not an exhaustive list on what has been done or what needs to be done. It's just a quick presentation on some of the areas the insurance industry has focused their efforts on, but some of the areas that need to be focused on going forward. As you've heard, the insurance industry has many components: insurers, reinsurers, brokers, managing general agents, otherwise known in the industry as MGAs, industry associations like IBC, insurance broker associations in each province, and regulators, all contributing in a variety of different ways to the distribution and the purchase of insurance coverages by individuals and businesses across Canada. The insurance industry does play a critical role and has a shared responsibility in addressing flood resiliency and adaptation by implementing proactive measures that reduce risk, promote community resilience, and ensure financial protection for policyholders. Here are some of my thoughts on how the insurance industry can approach flood resiliency and adaptation. First point being risk assessment and pricing. Advanced modeling. Insurance can leverage sophisticated flood risk models and mapping technologies to assess flood risk at a very granular level. This helps in accurately pricing insurance policies based on an individual property risks. Currently, this is being done in isolation by most insurers and reinsurers, and not a lot of information is shared. For example, probably the top three biggest insurers in Canada use a varying flood model and flood mapping. Second point, incentivizing risk management and mitigation. Insurance companies should be offering lower premiums or discounts to policyholders who undertake flood mitigation measures, such as elevating properties, installing flood barriers, or implementing drainage improvements. These are some of the individual risk type mitigations where policyholders will benefit from that through reduced premiums or even increased limits. Policy design and coverage. The insurance industry is always trying to look at providing clear policy language and coverages so the client policyholder can understand what the policy covers. Insurance policies should provide this clear and comprehensive coverage offering for flood-related damage too, including what coverages are available for the structure, contents, and any type of additional living expenses. This is the area where policyholders need to be educated by their insurance broker on coverages available and also any restricted limits if a flood event impacts the risk. As you might expect, and it was presented by Craig, challenging for insurance companies when someone is on a flood plain. It impacts, insurability. It also impacts the amount of insurance that is available. Innovative products. Insurers need to develop specialized insurance products tailored to specific flood risks, such as overland flooding, sewer backup, or coastal flooding to address diverse needs across different regions. It should be noted that flood insurance in Canada is still a relatively, new offering for personal lines and homeowners products. Amazing to think that the first came into play in 2017. So it is constantly being reviewed and products adjusted and developed. This is a big one, I think. Education and risk communication. And I'll talk a little bit about our role as an insurance broker. Community outreach. The insurance industry should be collaborating with government and community organizations to educate homeowners and businesses about flood risks and the importance of insurance coverage. This is very important at the broker level, who are often the face of insurance to a policyholder. They don't usually interact with their insurers directly unless they have a claim. So quite often that interaction between the policyholder, homeowner, is with the broker. And quite often a policyholder believes their broker is the insurer and their trusted insurance advisor, because they are the ones in the community that can help educate the public on flood risk and the insurance offerings. Promote resilient measures. Encourage policyholders once again to implement flood resilient building practices through informational campaigns and workshops. Once again, an area that insurance brokers can provide a lot of value in communities that they are situated in. The next slide, please. Investments in resilient projects. The insurance industry should be looking to resilient infrastructure projects that reduce flood risk for entire communities, such as improving drainage systems, green infrastructure, and floodplain management in collaboration with governments and non-government organizations to look at funding and implementing large-scale resilient projects that benefit both insurers and community. Data and technology solutions. This is where a lot of the work is being done by insurers and reinsurers these days. It is all about using data, and these days data is so important. The more data that you have, the more it can be used in so many areas of insurance in terms of proper flood mapping, pricing, development of product. This applies to both before an event and after an event. As you know, the first slide in my introduction, I'm a claims person. I sometimes consider myself a second responder. A lot of the work that I do is responding after an event, after someone has suffered a loss, and sometimes the event is catastrophic and widespread, such as the flooding in the Fraser Valley in 2021. Remote sensing and monitoring, using satellite imagery to monitor flood-prone areas in real time. This is being developed by reinsurers and insurers, and it will allow for early warning and notice to policyholders who could potentially be impacted by a flood. Some insurers are looking at text message alerts to policyholders if they are in an area that could be impacted by an event. I've seen this across Canada, some insurers, when it comes to wildfires, so why can't it be used for flooding events? Predictive analytics. Employ predictive modeling and data analytics to anticipate flood events, assess potential impacts, and enhance response strategies for an insurer's claims CAT team. Most insurers have CAT teams across the country to respond to these catastrophic events that were presented by Craig, such as wildfire, hail, hurricanes, tornadoes, and of course, flooding. Claims management and recovery. This is near and dear to my heart in my role, and this is the area where my practice is highly focused on. Swift claims processing. Implement efficient claims handling procedures to expedite recovery for policyholders affected by flood, minimizing disruption and financial stress. Getting the clients their money as quickly as possible with little hassle as possible is key. As mentioned previously, a good number of overland water flooding policies have capped limits, especially in floodplains. Best for insurers to get the claims paid to assist in the insured to move on with their recovery efforts. Post-event support. This is also from insurers, but also from our broker community. Provide post-flood assistance and resources to help policyholders navigate the recovery process. This is where we have our claims advocacy team that assists. Allows them to provide guidance, including access to reputable restoration contractors, leads on temporary housing if people are displaced from their home, and any available government financial support with government disaster claims that are eligible under in BC, the DFA, the Disaster Finance Assistance. In the flooding of 2021, we spent a significant amount of time with policyholders on completion of forms, documented coverages available, and claims amounts paid. The DFA wants to first see what has been paid under any insurance policy that is in place on the impacted property and requires documentation. And the insurance brokers community should be there to assist policyholders on that. And finally, advocacy and collaboration. Policy advocacy. The insurance industry can also advocate for policies and regulations that promote flood resilience, such as zoning regulations, building cone, and land use planning. That was touched on by Jason, Lucas, as well as Craig. Industry collaboration. There needs to be a lot more collaboration with insurers, reinsurers, brokers, and MGAs and other industry stakeholders to share best practices, data, and resources for collective resilience building. These can be done with the assistance of some of our industry associations like the IBC and also the Insurance Brokers Association in each province. Finally, by adopting a holistic approach that combines risk assessment, proactive policy design, community engagement, and investments in the insurance industry can play a pivotal role in enhancing flood resiliency and adaptation in vulnerable regions in Canada, like the Lower Fraser floodplain. And those are my comments today. Thank you very much for the time.
Thank you so very much, John. Really appreciate that overview. Next up, we're going to head to Ray Montieth, who's the Senior Vice President with Hub International Limited's Risk Services Division and leads their organizational resilience practice. Sorry about that. Ray has over 25 years of experience in risk consulting and has provided risk evaluations and risk mitigation strategies to a broad range of clients, including federal, provincial, and municipal governments across Canada and in various institutions, universities, a broad range of stakeholders. So without further ado, I will hand it over to you, Ray. Thank you so much for being here.
Thank you. It's a pleasure, and thank you all for being here and for the time and attention today. Interesting discussions. Just quickly, I am, as mentioned, with Hub International. It's the largest insurance broker in Canada, the fifth largest in the world, and we do provide coverage across Canada and the U.S. The next slide. Thank you. So clearly, as we've been talking about, there is a substantial gap in insurance coverage of losses resulting from natural catastrophic events. And significantly, that gap is much more pronounced in poorer regions. The first step to address this is to increase the density of insurance coverage regionally, and that would support recovery from catastrophic events. Ideally, the insurance industry certainly has a role to play, a substantial role to play through various public and private partnerships, and some of that has been discussed today. However, it is a stretch to expect that the insurance industry can take on all of this burden on its own. Certainly, it can provide support. Next. But climate risk leads to insurance risk, and we can anticipate that extreme climate events will continue to increase in frequency and severity, and that they will have new and unprecedented consequences. Regions and organizations and individuals are experiencing events that they've never experienced before at intensities that are profound and remarkable. And these events are compounding an already highly stressed insurance market. So there should be no question that insurance companies will increasingly require evidence of strong climate risk mitigation activities from existing and prospective clients. Next. And that takes us into an interesting aspect of the role that the insurance industry can play, and the space that I specifically play in within the industry, which is around resilience within organizations, and that includes communities and even individuals. Insurance carriers will increasingly require organizations to manage their climate risk. And fundamental to that is heightened awareness. Risk awareness is key in managing any risk. It's essential that consumers understand the implications across their entire organization and that they create a culture of preparedness and adaptability. climate change is evolving and its implications to an organization are not static. Therefore, organizations need to develop frameworks through which they can constantly assess and identify and manage climate-related risks. As in all activities related to managing risk, the process is cyclical, and which means that constant reassessment of the risk landscape is essential. So, as indicated in this graphic, constant monitoring, constant understanding and response preparation and mitigation, learning from events and anticipating the potential impact of existing and emerging risks to the individual and to the organization. Next. Interestingly, though, there's often a significant disconnect between perception and a perception of risk and actual preparedness for risk. And this graphic is from a survey that Hub conducted, which references our industry outlook survey, and it highlights the fact that many organizations recognize the value of transferring risk to protect top-line revenue against disruptive events, and they do that effectively in most cases. They transfer risk out of their organizations, but as the bottom point indicates, and on the right of that, many organizations fail to actively manage their retained risk and don't actively engage in ensuring that they are prepared for the risks that their organizations face. And that has a direct impact on their ability to mitigate and withstand an event. As the next slide illustrates, we often in our conversations with our clients, we've adapted a concept actually that exists within counterterrorism, which is the left of bang concept, and we've translated this to insurance speak a little bit and describe it as left of loss, the concept of left of loss. And the idea of that is that organizations have an opportunity to mitigate and prepare for prior to an event. And if they understand that an event is a likelihood, and Craig touched on that in his presentation, as the insurance industry is increasingly stressed by reconsidering coverage of events that are not accidental, but are predictable. So organizations need to create capacity to prepare for the effects of climate change on their operational environments. And that includes not only their physical location, but also on raw materials that they may depend upon, on supply chain disruptions that are potentially impactful, and as well as changing market demands and appetites associated with climate risk. Organizations will increasingly be required to understand, assess, and manage climate-related risks, increase capacity to prepare for and adapt to a changing climate, develop adaptation strategies and policies, and to prioritize climate resilience planning and decision-making. So the more time that organizations spend on the left side of the event timeline, the more they can mitigate the impact. You can't always control for the fact of an event, but it is possible through preparation and mitigation activities to minimize the overall impact that event will have on the organization. Next, please. One of the interesting tools available to us, and this has been touched on by a number of the presenters, is the availability of modeling tools and to provide predictive analysis and to aid consumers in understanding what their risk is. Catastrophic risk modeling is an excellent tool that supports identifying loss potential associated with a particular modeled event in a stochastic event set. A range of potential events can be modeled based on historical data and likely event parameters. And then from that model, hazard potential can be identified to form the basis of a vulnerability assessment, which can identify potential physical damage and potential financial loss estimates. All of that helps an organization to identify the extent of their exposure and predict foreseeable losses. And that should then inform strategic risk management. Unfortunately, as this slide and the next slide indicates, both the major modeling organizations, which are Verisk AIR and Moody's RMS, are somewhat hobbled and by their ability to provide predictive analytics in the Canadian marketplace, specifically in flood risk. That can be significant because flood risk models are not available for Canada through the two industry leaders. And in both cases, the North America models that are available do not include Canada because the mapping data sets are not sufficiently robust. So that creates a significant challenge around some of that predictive modeling that is so helpful. So as the next slide indicates, the insurance industry is stepping up for that and engaging in that. And John touched on that as well, that for example, Aon is emerging as an industry leader in Canada in this space by developing both fluvial and pluvial models for the Canadian market. So definitely stepping up and filling a gap where to provide a deeper and more substantial information to the marketplace. So and on the next just on the next slide, please. So the insurance industry certainly has a role to play, and it will continue to play an important role in creating awareness of the physical risks associated with climate risk. However, it's increasingly important that insurance carriers drive awareness of additional risks arising from climate change. Clearly understanding the implications and potential for direct impact on business operations, supply chains, shifting customer expectations, and regulatory requirements, among other things, will be paramount for the insurance industry to grasp and in turn convey through coverage options and requirements for strong risk management programs. The insurance industry is and should be shaping the conversation with partners in government as well as with their clients. Next slide, and thank you.
Thank you so much, Ray. Really appreciate that. We've got so many great questions in the chat and in Menti as well. I think what I'll do is I'll first turn to all of the panelists with one question that came in advance of this webinar. And I think this resonates with people across the country. So in the media, we've seen coverage about how flood maps can result in losing insurance and therefore mortgages. Could you please explain how flood maps are produced and the role of floodplain maps in informing insurance coverage and eligibility? I'll turn it to you first, Craig.
Sure, thanks. Thanks, Sharma. So the simple answer is no. Flood maps and the existence of them isn't going to cause anyone to lose insurance. We've been advocating that flood maps be made available so homeowners can determine their own risk and determine the steps and then be incented to take action to protect themselves. The reality is that insurers already use flood maps that are provided, and I think Raymond talked about this. There are international flood models. There's one out of the UK by a company called JBA Associates. There's another one out of Eastern Europe by a company called Impact Forecasting. These are the models that we, and Verisk has a new one that's fresh out. These are the models that insurers use, and they ingest and draw upon those sources available from governments in order to refine their data. But the reality is your insurer already has access to those maps. He's already using them for underwriting. And they're not the only thing. The construction of your home also feeds into the underwriting, and the contents, and where those contents are also play a role in what the price of your premium is. So it's a red herring to blame the flood maps themselves. They're not actually going to. The availability of those maps isn't going to drive home values down.
So what I hear from you is it's one piece of evidence in a range of pieces of information, including, did you say construction materials? It was hard to hear you at that moment.
Sorry, including construction materials as well. Yeah, they're just one piece of the puzzle for underwriters.
Thanks, Craig. Anyone else from our panel? Jason?
Sure, yeah. The bigger myth out there is that flood maps are going to reduce the value of your property. And then that leads to, some concerns around mortgages. We're not reinventing the wheel in Canada when it comes to flood maps. They've been available in many jurisdictions, most of our industrial counterparts, for many decades. And there's been large scale studies that have been done on the impacts of flood maps on property values. And as much as we would like risk maps to influence the property market in ways that helps people manage their risk, there really isn't that much of an impact. An actual flood can temporarily lower the value of properties in your neighborhood, but the perception of flooding does not. And they've done huge studies with huge samples in the UK, for instance, where they say, okay, we've now got 3 more million houses that are considered to be at high risk of flooding. Let's follow them over 10-year periods and see whether or not there's been any change in the mortgage markets. And there isn't any.
Thank you. Lucas, please go ahead.
Yeah, thanks, Charmaline. And I think Craig and Jason said a lot of what I would have said anyways. But the other part I'd just like to draw attention to is really flood maps aren't just there for insurers, right? Like the value of increasing that transparency and getting that information out of the proverbial black boxes and out there into the public is so that other financial service providers can have the same kind of conversations with customers. So you actually get kind of a common view of hazard and exposure that if we get good enough at this stuff at the property level, so people are hearing the same messages at multiple points. So not just what you're hearing when you're buying a house, you're hearing it when you're securing a mortgage, and you're hearing the same kind of information from your insurer. And that's ultimately like one of the key lessons that we've heard is you need to hammer people over the head with this stuff. We can't just rely on it to happen at the time that someone goes to their insurer to understand that the house that they bought happens to be exposed to flood, wildfire, and earthquake. So it's increasing that transparency and improving the kind of multiple touch points that someone can have to hear that messaging.
Thank you. And I think somebody in the chat, Kate Sharon, has a piece in the conversation related to this as well. So I can't find it in the chat, but if you go back, Kate had also put something in there about that. Thank you. Eric, I think I'll hand things over to you. We have another question, and this is more related to nature-based solutions.
Perfect. Sorry, little unmuting challenge there. Excellent. Thank you so much. I'm a biologist who works with Ducks Unlimited Canada, and I help to co-organize this workshop. And so I have a really great interest in nature-based solutions in the Lower Mainland. And so we have great examples like the Living Dike in Boundary Bay and other green infrastructure, rain gardens and whatnot. And, these different natural infrastructures play a really key role in climate resiliency and in reducing flood risk. And so really I'm really interested in better understanding, what are ways in which the insurance sector can be part of mainstreaming nature-based solutions. And so there's one, I think, really great example, the Nature Force, which is an initiative that I work on. It's a partnership between Ducks Unlimited Canada and 17 property and casualty insurance companies to try to mainstream and implement nature-based solutions for flood protection across Canada. And so well, actually, Hub and Westland are partners in Nature Force. So that's a fantastic example of the role of insurance in trying to mainstream these natural infrastructures, nature-based solutions. But what are other things, other ways in which the insurance sector can be part of mainstreaming nature-based solutions? You know, what will help us to identify these opportunities to test, implement, evaluate, and even, I guess, very importantly, encourage adoption. So curious if anyone on the panel would like to weigh in on that one.
I can start. We at IBC, we've spent an inordinate amount of time trying to galvanize nature-based solutions across the country. The big issue that we've run into has been the pricing. How do you price the value, the resilience value of a wetland, for instance? We know that wetlands act as essentially storage basins that hold spring runoff when and decelerate snowmelt in the spring, right? But how do you put a value on that? And then how do you translate that value through some sort of financial instrument, turn that into a financial instrument that's investable? And that seems to be the nub of the problem. Now, one of your members there, I think, cooperators, most thinking about how to do this, and we probably need some pilots to do it. But I mean, bringing back to that risk rating system that I mentioned, properly constructed, ideally you could use that as a measurement tool of some sort to aggregate risk across an area and then put a value on it. You know, about and then run your models around if you had the wetlands restored, for instance, how much runoff would they retain, and then how much losses would they avert, you know, during a particular flood event that you model. Anyway, I think we've got the know-how. Conservation authorities have done some really good work in this area as well, but we're not quite there.
No, fantastic. I think that's super helpful. I'm curious, John or Ray, if you have any thoughts, you know, being from insurance, of what information you need in order to support turning it into a financial instrument, these nature-based solutions.
Well, I think definitely Craig highlighted one of the challenges around associated with pricing and incentivizing that way. I think a significant opportunity that does exist has to do with building back better and looking at how we are utilizing tools to inform people who are businesses and homeowners and business owners who are in areas that are prone to events, to understand how to work within the environment that they operate in, to develop a more solutions-based method of withstanding events. And I think there's an opportunity there to understand the environment within which you are constructing and building, the types of materials that you use, the awareness of elevations and potential flood heights and things like that. I think those are opportunities that are often missed, where we either simply don't return to an area, or when we do return, we build the same thing that was impacted originally. So I think there are significant opportunities to understand the environment that we are constructing in, that we're operating in, and be responsive and reactive to that environment.
Yeah, I think that's a great point. We have to tailor these opportunities to the specific environment there. Definitely. On that thought, yeah, any other thoughts from the panel about, be it challenges or barriers to insurance being, say, deployed for nature-based solutions? For example, we have, you know, the concept of parametric insurance, where within parametric insurance, there's a trigger set. So if this certain level of damage or a certain event happens, then there's automatic payouts. So we can be very responsive. So for, natural infrastructure such as, that living dike that we mentioned, say there's
Uh-oh. Eric froze. So we'll just glean from what he was saying. What are the challenges of parametric insurance being employed all over? Because it does seem like it's an interesting solution where you're insuring against something that's planted and might fail because of weather, etc. So would anybody like to take that? Why don't we see that everywhere?
Sure, I can. As a part of the federal government's task force on flood insurance and relocation, we had a good look at parametric insurance. And the one thing I would just say broadly about insurance is, and I think this needs to be understood within sort of the broader conversation, is that it's not just insurance that is going to be needed to sort of manage all of these solutions, right? Things like parametric risk rating, nature-based solutions, it needs a lot of government. And government, and what I'm talking about in government is funding for research. We need experimentation. We need case studies. The Americans are about, I'd say, 10 years maybe further ahead, and a lot of the thinking out of the US comes from parametric deployment. And we're talking about parametric on the property side, not existing agricultural strategies and whatnot. But it's an old product. It's been around. And they're doing more sort of grounded case studies by taking a look at how you can provide a product at, let's say, a community scale. And I actually think there's a lot of opportunity there because within a particular community, there's ways to expand insurance coverage using parametric coverages or micro insurance, right? I think we should have abundant insurance in Canada, and that's certainly something that we can have. My hope is that if we're going to have a Canada Re or some sort of subsidiary, that there are some resources that fall from that to help in some of the more technical aspects of designing parametric coverage. Of course, the big one is the paucity of data. You really do need to have a good set of models to understand that in a particular area, you need sensors and things that basically say, hey, this particular area, my apartment had a rainfall that exceeded the 1 in 100 year mark, and according to my coverage, I now get a payment back of whatever it is, right? A layer there of coverage. So there's a lot of sort of parts need to go there, but the biggest hurdle I would argue is just the administrative and political one. We need expertise. So we need municipalities allying with, let's say, this new Canada Re to leverage some of the data and start negotiating. This is a product that is sold in the marketplace, but we need, I think, more resources and expertise. So it's not just insurers that this is the problem is going to be on. We need governments especially to step in. And I think this could be one of the public benefits that come from the flood insurance program.
Thank you. So speaking of the flood insurance protection program, one of the questions we had in Menti is as follows. In the most recent federal budget, there was the announcement about the federal flooding insurance program. Won't this act as a disincentive to building on the floodplains? In other words, the insurance is one tool for incentivizing or disincentivizing development and the decisions that put people at risk. What are your thoughts on that, Craig?
Sure, good question. So there is absolutely that concern. I think the intent is that new builds in high-risk areas would be excluded from coverage. So essentially, there would be a cutoff date after which homes would not be eligible if they're built there, and it would go together with a couple of other measures that the federal government's looking at, which is to create that line on the map of where the high-risk zones are, so it's really clear to everybody where eligibility would be affected, and also it would be the other area that they would Well, I just totally lost track of what I was going to say. Sorry about that. But anyway, the bottom line is that this has been heavily discussed, and I think you just have to explode those homes.
Fair enough. Anybody else from the panel want to weigh in on that? Or anything related to the proposed flood insurance program? No.
I remember what I was going to say. The DFAA program, Disaster Financial Assistance Arrangements. I think that what's going to happen is there will be changes to that programming also, so that people who new builds not only won't be accessible, you won't be able to get the flood insurance through the program, you also won't be eligible for disaster financial assistance, and no one's going to bail you out if you don't have insurance. So.
Right. So the bottom line is with more information, with these tools, and trying to make sure that the high risk homes are not being developed on the floodplains. At the same time, if you know that those areas are in high risk, then new developments or those won't be necessarily allowed, or if they are, then the government won't bail you out. Right? Yeah, that's great. Thank you. I mean, this opens up a bigger question here about this is filling one of those protection gaps, landscape gaps. What are different responsibilities, and what are the shared responsibilities for addressing landscape and protection gaps? So all of you have addressed this in some way, shape, or form, but is there something else that you feel should be addressed?
Well, this is a, close your eyes and paint a governance arrangement of what Canada ought to look like, right? We've looked at governance and who should do what and why for 7 years or 8 for a long time now. And I think the question comes down to, okay, what's an ideal allocation of responsibility, and then what's politically viable? Provinces, for the most part, manage disaster risk reduction in Canada. We then have the local governments who more or less are in charge of the implementation of that stuff. So they're the ones who are making sure building codes are actually enforced and done. And the federal government more or less acts as a source of funding. I'll just say this. Given the catastrophic risks the country faces, I would argue that I think the federal government needs to play a much bigger role. Its role is not as significant as we see in our G7 counterparts. And the reason I say that is because ultimately it's the insurer of last resort, and the failure to mitigate and prepare will end up on that government's balance sheet. So I think it's prudent that they do things, for instance, like raise the minimum amount of that they will contribute to things like mitigation funding or disaster risk reduction. It's 40% right now through the Disaster Mitigation and Adaptation Fund, which means provinces and municipalities have to come up with the other half. That's quite a significant burden. So I won't go into a ton of, I think, a lot of different stakeholders have responsibility, but my one takeaway is I think the federal government could be doing more, and it has committed to do more. I do have to applaud the current government. Absolutely, in that way.
And I think you raise a good point too of what is being funded. So we keep hearing about Build Back Better, but we've seen over the years that isn't as straightforward as you'd think. So you might get funding after a disaster, but it's really to build back the way it was. So that's another thing that seems to be an issue. Okay, we've got so many other questions. Samantha has one in the chat here. With the BC government's recent legislation for increasing housing densities, and in particular around public transit hubs, some communities are tasked with allowing for dense housing forms in flood-prone areas. How will this legislation be balanced with the National Flood Protection Program? So, i.e., would those areas not be eligible? That's over to you again, Craig.
This is like, for us, the multi-million-dollar question. If we're building, boy, that's a great question. We've actually been in active conversations with the Prime Minister's office over the last 3 weeks about this exact concern as they rolled out the housing plan. There was a task force on climate and housing chaired by former Edmonton Mayor Don Iveson and Lisa Raitt. They put together a whole bunch of recommendations, many of which the federal government took, but when it released its latest housing plan. But in those recommendations were you essentially can't do this. You need to avoid flood-prone areas, not be putting dense housing in them, at least those that aren't mitigated. Because who's going to end up picking up the bill when they flood? It'll be, at the end of the day, it'll be either themselves or it'll be taxpayers. So we need a lot more intelligence planning. As we're trying to address this housing supply crisis, we need.
Sorry to interrupt, Craig. It's a little hard to hear you sometimes. We need a lot more. What did you say?
We need a lot more thinking, I think, and attention being paid to where these new housing developments are being put.
Thank you. Yes, where are we building? Where are people exposed? Thank you so much. All right, so now what I'm going to do is I'll let the panelists pick the questions I'd sent to you earlier, the things from Menti that people have shared, and I'll just bring up the Menti as well so everyone can see. So we've got all kinds of questions here, and of course one from the chat as well. So I'll just open it up to the panelists and see who wants to go ahead and answer something. For instance, maybe Lucas, is there something you'd like to answer?
Yeah, I can provide, while others read questions, I can provide a stock answer of sorts to a question that was asked in the chat about how our approach, the risk assessment we did at BCFSA addresses biodiversity and nature-related risks. And I'll start by saying I think it's an area that's developing very rapidly at the international and national level, and it's something that we're definitely monitoring. And figuring out where people are going. I think some comments that were made at a conference I was at a few weeks ago really drew out biodiversity as an area that people are saying, like, all the work that people are focusing on climate risk is all for naught if you don't have that ultimate piece about biodiversity and longer term sustainability. Like, if there isn't a financial services sector to serve, like, what's the point of what we're doing? But couching my response in that, our initial focus has really been on climate-related risks, and it's like we're chewing an elephant a little. So a lot of what we're doing is trying to adapt these standards and approaches that have been developed at the national and international level. So in particular, the Task Force on Climate-Related Financial Disclosures and the guidance that's been developed for the federal financial institutions by the Office of the Superintendent of Financial Institutions. So I think biodiversity and nature-related risks are areas that are going to be part of a longer-term approach as we start to get more of that development at the international and national level. You might be aware that there's a newer task force, the Task Force on Nature-Related Financial Disclosures. I think once we have a lot more standards and we better understand how the risks associated with those two areas affect the types of institutions that are active in BC, we'll probably be exploring that more, and it will become a bigger part of the conversation.
Thank you so much, Lucas. I know that Craig and Lucas both have to go in a few minutes. Craig, one last question for you. I'm not sure if we heard whether the National Insurance Program will cover agricultural and farm properties. Is that something you might be able to speak to, please?
It's intended to cover primary residences. That's the focus of the program. I believe they are still considering secondary residences, whether or not they'll be in the program. I don't know honestly whether agricultural, if an agricultural residence, where someone lives on a farm, yes, that would be definitely included. But as far as the rest of the buildings or operations, I don't think those would be eligible under the program.
Right, and I guess along those same lines, we'd had a session at CatIQ on insurance for in Indigenous communities. And one of the points that was raised was insurance for community-owned or collectively owned or collectively used cultural assets. So hunting lodges, those types of things. Again, the question is to you. I wonder, might those be considered, because those are central to First Nations cultures and their way of being.
Yeah, and on many Indigenous reserves, for instance, the Band Council actually owns all of the, like it's owns the residences on the reserve, and in those cases, and one you mentioned, often it's a commercial policy that applies, and there hasn't been any problem with getting flood insurance with commercial properties. So there's no market gap or protection gap there. So it hasn't been factored into the program. However, as we try to empower Indigenous communities through owning their own homes, for instance, and there's that, that change is underway some places across the country. In those situations, yes, we're looking at, there's an active conversation about how those residences would be incorporated into the program.
Thank you so much. I'll let Craig and Lucas leave us. So thank you so much. And after this, we'll continue our Q&A for another 10 or 10 minutes, I guess. So anyway, thank you so much. Lucas, any last words? Craig, any last words?
No, thank you. Thanks for the opportunity. And look forward to engaging with all of you at some point in the future again.
Thank you so much, Craig.
Yeah, thank you. Thank you for organizing. Thanks for inviting me, and thanks for all the participation. Really good questions, and looking forward to listening in on future webinars. Thanks, Charmaline and Dan.
Thank you so much.
Thanks for the opportunity. I would just say that I think the challenge we also need to be aware of here is not just that sort of the doom and gloom in the risk situation, is that Canada is going to be in a situation where there's a lot of opportunities because of demand to be here with stable democracies and a northern latitude. So climate resilience isn't just about risk management. It's also about finding the places where we can grow abundant and wealthy communities. And these conversations present a lot of ideas that help direct us in that along those lines. So grateful. Thank you for the organizers. Really well done. Great questions. Wow.
Thanks so much. Take care. Okay, well, I think we'll take a few more questions and then we'll wrap up and let everyone get on with their day. This is a lot of material to sink our teeth into. For our panelists, for Ray and John, especially if you have any questions that you'd like to answer from what you've heard so far, what you've seen, or Jason. Otherwise, I'll share the Menti and then we can take a few more questions.
Maybe I'll just say a few words, Charmaline. The position that Westland in, as well as Ray's organization hub, we're in the communities. We have bricks and mortar operations within some of these smaller communities. I think it's very important to understand and appreciate the value that an insurance broker brings with respect to educating, spending the time to go over what coverages are available for policyholders, clients when it comes to flood. And that's just not overland flood. That's that's heavy rain flood, pluvial, fluvial. What limits are in place, if there are any limits in place, and try to educate the public as to why the insurance companies have approached this. The other thing is that insurance brokers quite often in a number of provinces have access to different insurers. So I think it is important that the brokers spend the time presenting options to clients and policyholders to say, insurance company ABC provides, this type of coverage subject to these types of limits, subject to these types of deductibles, whereas, company DEF provides this, and have those discussions and engage and understand why is there a variance with respect to insurers out there. That's just the Canadian landscape right now. So I think there's a ton of value for brokers, especially, in these communities, to be able to educate and assist clients in terms of understanding their policies, but also understanding some of these proactive mitigation approaches.
Yeah, thank you. That speaks to one of the questions that somebody raised in the Menti, which is how can the insurance sector be proactive in assisting property owners in flood risk mitigation? And I think you spoke to that quite well. So the education piece, Ray, would you like to add to that?
Yeah, I think it's a really important aspect of understanding the industry and understanding that the role that the insurance industry plays as partners, as educators, but also in a larger sense as driving the regulatory environment. Without insurance, the likelihood of building codes and other regulatory standards would probably not exist. And the insurance industry has been fundamental to driving change, and by creating thresholds at which society becomes insurable, and the insurance industry can partner in that. And I think it's an important aspect of how the industry partners in solving and being part of the solution rather than a barrier for that consumers need to overcome. And it is an important aspect of the role that the industry plays in society and in solving some of these significant challenges that face us.
Thank you so much, Ray. I think also what you and John are talking about as well is you are, and I think you mentioned this, John, you're meeting people at some of their worst moments. And that's also an aspect to keep in mind, the empathy and the fact that you're there on the front lines, second lines, helping people through not only that initial impact, but all of the weeks and months potentially that come after that. So I'm just wondering, as a follow-up to this education piece and encouraging people in different ways, I just wonder if you could speak to some of that. How would you navigate helping people build their own resiliency, especially when they're dealing with recurring events or they have different capacities?
Yeah, I think it's been touched on a fair bit throughout the course of this this interesting panel discussion, and a lot of what becomes important is you can't manage what you don't acknowledge or what you don't understand. So understanding risk, understanding what the level of risk, and there's been a lot of discussion about transparency and the need for transparency, and how premiums are set and how coverage is arrived at, but also in understanding actual risk that consumers are facing. And the insurance industry absolutely has a role to play in that. And as John mentioned, very specifically brokers do, because that is where consumers interact. They interact at the broker level. So for brokers in the industry to be transparent, to be knowledgeable, to be able to work with clients to fully understand their risk, to understand levels of coverage that they need to have, what makes sense to transfer, and how they need to manage the risk that they retain is germane to how certainly brokers engage in the conversation.
Yeah, I support Ray on that. I'll also add that I think it's really important, not just, proactive mitigation strategies, before the policy is written or placed with an insurer. It's also post-loss in terms of looking at what the continued exposure and risks are to come up to a collaborative plan as to how to respond to that. And that's collectively, you know, the consumer, the broker, and the insurance company to work together to, you know, to prevent or minimize future losses from happening. And I think that that's very important, and spending the time with the client to explain, you know, an insurance company might say they want X done, you know, and you know, just not presenting to the client and saying, here you go, you have to do this, spending the time and the reasons why that it's important to carry out that step to mitigate future damages.
Yeah, thank you so much. And working with local municipalities and local not-for-profits, I used to work with a local not-for-profit, Reap Green Solutions, that did that flood mitigation education and outreach with people. So they're natural partners as well.
Yeah, I mean, you know, we're insurance brokers, we don't have all the answers, but we're there to assist our clients and direct them to resources, you know, be it on the internet or be it, you know, resources that you've just presented, Charmaline, of, you know, community resources, government resources, industry resources that can provide additional education and awareness as to, you know, some of the questions that a consumer might have.
Wonderful. Thank you so much. And I should direct people back to the Intact Climate Adaptation Center at University of Waterloo. They have great infographics for heat, wildfire, flood, etc., that you can share with your clients. So thank you so much. Dan, I will hand it over to you.
Yeah, and thanks so much, Charmaline, for doing such an awesome job of moderating, and Ray and John for sticking with us all the way to the end here, and everyone who's been staying interested and popping ideas into the chat and questions and making this a really interesting and interactive time. Yeah, a lot to chew on, I think, and I'm just noticing there's so much changing and shifting in this, and Jason even said himself, we're making progress, believe it or not. So I think that's pretty great, and a note to end on. And just quickly to say that this work is being supported, or my role in it at least, is being supported by Real Estate Foundation of BC and the BC Salmon Restoration Innovation Fund. So yeah, very happy to have hosted this session. We'll send out recordings and the slides afterwards, and we'll see you again soon.
Thanks
all.
everyone.
Thanks all.
Thank you, everyone.